So, hey, welcome back to Accelerated Real Estate Investor with Josh Cantwell. Today, I am really excited to be interviewing Gene Guarino. Gene and I have known each other for years. We have participated in several masterminds together and live events together. But this is the first time he's been on the Accelerated Real Estate Investor podcast. Gene has trained thousands of investors and entrepreneurs throughout the United States on how to invest in and operate residential assisted living homes. And for the past 25 years, he's been educating people on the strategies of successful investing, business, and self-employment. He is sort of the kingpin, if you will, of the residential assisted living area niche. He has been investing in it for the past 7.5 years and quickly became the number one speaker and trainer on residential assisted livings. So in this episode of Accelerated Real Estate Investor, you're going to learn, number one, what is residential assisted living versus big box assisted living homes. Number two, you're going to learn the deal structures that need to happen inside of a residential assisted living to buy the property and to own the business of the assisted living, and what the projected returns should be for limited partners and general partners. Number three, you're going to learn the importance of the operator that owns and runs the building versus the manager that actually works with the residents. Number four, you're going to learn how many units it takes to scale this business. Gene's going to give you an example of 10 units, 10 beds. But how many of those do you need to have to be at scale to sell that portfolio for a massive multiple to a larger hedge fund or institutional investor? Number five, you're going to learn why Gene says if he's not getting at least a 15 cap or a 15% rate of return, he's not even interested in the deal. And number six, you'll learn why Gene is working with his entire family to run his residential assisted livings and how his family operation has allowed him to give back to his kids and grandkids and really build an amazing family structure and a family business. And so you're really going to love this interview with Gene Guarino on the Accelerated Investor Podcast.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you're looking to retire early with forever passive income, you're in the right place. This podcast is the go-to destination for real estate investors, both active and passive, and multifamily apartment investors, both new, intermediate, and advanced. Now, sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So, hey, Gene, listen, so excited to have you on Accelerated Investment. Looking forward to this for a long time. Thanks for jumping on.
Absolutely. Looking forward to it as well.
Hey, Gene, listen, so much crazy things going on with the pandemic. So I'm always interested to know from guests, what's something that they're working on like today, like this afternoon, tomorrow, that they're really excited about, whether it's a new property they're developing, in your case, residential assisted living, whether it's a new event, a new book. What are you working on right now that gets your kind of juices going?
Yeah. We know each other through residential assisted living. Me from that, but actually we're doing a lot of different things. And two that are really coming to my mind as soon as you said that is shared housing. There's a lot of opportunity right now where people can use a real piece of real estate, a house, an apartment, and do shared housing with it. And one of the good, bad things in the world that's happening is the government's confiscating my money, your money, and giving it away to people they think are more deserving. So there's literally billions of dollars right now that are being allocated for shared housing in different forms. So that and our Pitchmasters event that's coming up to show people how to raise capital.
Oh, Gene, so let's peel back the onion on both of those a little bit. Let's talk about capital, because we do a lot of multifamily deals. You do lots of different kinds of deals, focus on residential assisted living. Of course, those larger deals, whether they're kind of mom and pop, small, medium, large. A lot of people are, syndicating those or raising capital. So tell me about this strategy that you use to raise and recruit capital. And I know you're going to be having an event on that very soon.
Yeah. So we have private equity funds just like you do as well. And I think one of the key pieces is having a great, the sponsor, but the operator, whoever's going to be operating that project ultimately. So in our case, when we say residential assisted living, if somebody's going to invest in that, it needs to have a good operator attached to it. Somebody with experience who knows what they're doing, who's going to take care of their money, but also do a great job. So the pitch event, the prepare to pitch event is exactly that. A lot of people want to and need to raise capital. They don't know what to say, how to say it. They don't know what a business plan is, a PPM, et cetera. You and I know that stuff cold, but a lot of other people need to know that. So that's why that whole event was created. And we've got some big heavy hitters coming in to teach on that. And then in regards to the raising of capital, we do it on a per project basis. So we have a debt equity fund as well as just the equity fund that's being invested into specific projects. Those projects are typically in the $1 million to $3 million range.
Got it. So let's talk about that structure. And again, we talked about this before we were getting ready to hit the record button. Selfishly, I've got all these apartments that we own, but I've got more of my friends, students, joint venture guys, they're talking more about residential assisted living, other different types of multifamily, not just, B-class apartments, but it could be mobile home parks. I'm very interested to hear more about what a typical model looks like on a residential assisted living. What's the GP share? What's the LP share? Are there preferred returns? How does that all structure? Because, pitching a deal, building relationships with possible investors, pitching a deal, to me, it's definitely about the return for sure, but it's a lot about relationships. I'm sure you're going to talk about that at your event, but let's just peel back the onion a little bit and let's talk about the structure first. What is a typical good structure that you see in that space that's winning a lot, where it's getting a lot of capital?
Yeah. So first of all, there's three elements to it: the real estate, the renovation, and the business startup. So when you think of it that way, in an apartment, it's all the real estate. It's got value based on that asset. With the residential assisted living, one of the key elements that's not as secure is the business startup, right? It costs money to start a business, get ramped up, et cetera. So that means there's some more risky money in there, which means it typically will get a higher return. So it, first of all, depends on how passive somebody wants to be. If somebody just wants to be in a debt fund where they're getting 8 to 10%, just you put the money in and the money spits out and you're in it for 2 to 5 years, a debt fund, and that's pretty much it right now, is the 8 to 10%. And that's, in this day and age, that's a good rate of return for doing absolutely nothing. And it's cash in and cash out. On the other side, because there is the property, the renovations, all that time frame, and with the current, building costs changing, and that means going up every day, that, and then the operations, there's more opportunity there. So it really depends on if there's a debt underneath it. So if somebody's going to the bank, like we would go to the bank, get the first 60% from the bank. Now the equity is the other 40%. That's more of the risky money on top of there. It's going to get a higher return. Typically it is with a pref of some kind. So it might be 5%, something in that range, where it's a pref, the money is earning money. And then on top of that, it's some type of a profit share. And that profit share might ultimately get you to, and I don't want to overstate it, right? You always want to underpromise, overdeliver, but somewhere 10% to 18%, depending on the deal itself. And I want to make sure, I know you want to know the numbers, et cetera, but it's really the same as apartments in a lot of ways. The risk is different. Everything has risk, but all of that. But I really don't want to shortchange at all the aspect of people by people. I know personally, I've invested in other people's projects without it. And I know this sounds bad, guys, I really know, but it's true, without even reading the business plan. Because, I know Josh, I know he's a good guy. I know he's trustworthy. I know he's done it before, and I'm buying him. I know if he's vetted that project and he's involved, I always have a risk of losing money, but I know him. And ultimately, that's what I'm betting on, is you, not that project. And I'm assuming it's going to have great returns, but it's not just that.
Yeah, no doubt. I think when we look at like a newer operator, a newer business, you care more about the business plan, who's involved, who's doing capital improvements, who's reconfiguring, if it's a small residential assisted living, reconfiguring the house to make room for maybe 6 to 10 residents or something along those lines. And then after somebody's done it or we have a relationship, it's like, okay, tell me about the deal. What do you think high level? Give me what the return. Okay, good. Here's $200,000 or whatever, $500,000. I have that in my own business, guys that are like, hey, I was on your webinar. I'm in for 250, right? They listen to the kind of the presentation for 45 to 60 minutes and they're in. I'm curious on the residential assisted livings, Gene, when somebody is owner operating them, what is the typical exit strategy to return limited partner capital? Is it a refinance? Is it a sale? What do you typically see there? Are people exiting those buildings because they're getting a multiple, they're getting a high cap rate, or are they deciding to refinance and keep them and try to return some of the limited partner money through the refi?
Yeah, I'm going to give you what's typical, and it always depends on somebody's personal desire. So you just laid it all out. It could be a refi, and usually that's after 2 years, before 5 years. So I always say 2 and 5 because it takes time to get that normalized and get it maximized. So the refi is probably going to happen after 2 years, but before 5 years, just depends on the world of lending. So that's one way. The total exit, typically, that's not the exit on this first round because the better exit is to get a number of these different homes, package them together, and now it's a much bigger deal. The return is much better that way. But it depends. People's lives change, or they say, I've got one guy right now who built an amazing property. He's got the plans, the land, the approvals for the second building right across the street. But he had sold a software company, and the software company basically said, we need you back, paid him an outrageous amount of money. So he's like, you know what? I got to take it. So now all of a sudden he's selling his. So there's ones that do get sold quickly. The businesses themselves right now, my goodness, they're on fire. You think it's hard to find real estate, just any kind of deal or project? When it comes to these businesses, residential assisted living, if somebody has one that's running well and it's got great cash flow, those are incredibly hot commodities, very, very hard to find. So if you find a good one, or if you want to sell, you can get a premium price right now.
My newest and most powerful real estate investing book, The Flip System, is now available. And for a limited time, you can grab your free copy at getflipsystem.com/podcast. Using the same proven principles, secrets, and investing strategies I'm sharing in this book, I've been able to personally close over 750 highly profitable real estate deals over the last 15 years, make over 400 private lender loans, raise over $30 million of private money, and acquire over 2,000 units of apartments. Get my newest book now for free for a limited time at getflipsystem.com/podcast. That's getflipsystem.com/podcast. So I've got a guy. This actually was a fix and flip student of mine a couple of years ago. We've stayed in touch. He's invested passively in some of my apartment syndications. He has a couple of these residentials. He's sending me his business plan now in the mail. I don't know why he didn't just email it to me, but he wanted to send it in the mail. So it's on its way.
It's that big.
Yeah, right. It might be a package from you. I know your organization does an amazing job of putting these together, these business plans. So he's sending it to me. But he says to me, he says, Josh, here's the opportunity. He says, there was a group of docs, 12 docs, that went and built this brand new facility. And it was just about to open. And they all threw their money in. They built it, I think, for cash, a lot of their own capital. They were about to open it, and then COVID hit. And they all, because they're docs, they freaked out. They didn't want to open it and then have something happen, like somebody pass away in one of their facilities, have the negative press. So brand new facility, never been, I think, fully permitted. I think it's just on the step of like a certificate of occupancy or whatever you call it in the RAL space, but the equivalent of that. And then he's like, I can buy this now. They want to exit it just because they don't want to deal with it now. So what should I be looking at? What are some questions that, as a potential partner, limited partner, I might even have to step in as a GP, maybe sponsor a loan for him? What are some questions that I should be asking him? And this is probably some of the stuff you talk about in your pitching academy, because these are the questions that a partner would ask a sponsor or an operator. So what are some things I should be asking him to kind of check the boxes to make sure I've got a good deal that I potentially invest in?
Great question. And obviously everything is very specific, and I'd have to get that big business plan in front of me to see it as well. But in the business plan, some of the key elements you're looking for is, number one, is it even needed in that area? Because sometimes people do things because I read a book, I saw a podcast or heard a podcast, and this is good, and they did it. But that building may be in the complete wrong area. So first of all, is it in the right location? Is there a need for it? And that's all about the demographics. So did they do a study where we call it an internal feasibility study versus paying 10,000 outside? But the idea of how many beds, how many seniors, how many beds are coming, et cetera. We know that this silver tsunami is coming, but the question is, if it's not in the right area, it's just pass. It's a hard pass. If it is in the right area, great. We got the first thing based on demographics. Second, you said, not sure if it is approved. And I'll use that word approved because certificate of occupancy means you can use it, but use it specifically for this purpose. And I'm assuming, right, that they would have gotten that together. If they didn't, major mistake. But let's assume that they've got that. Good. Your next step is really the operator, because it doesn't sound to me like these 12 docs who were investing were the operators. They were just putting in $1 million each or whatever it is. So they're the ones who are just the investors. The key is who's going to run the show. The best equivalent I can give you, it's like a restaurant. We were at a restaurant last night. You walk in the front door, you sit down at the table, and the show begins. There's a front of the house, back of the house. There's chefs, there's servers, there's cleaners. Who's going to operate that restaurant? Who's going to operate the residential assisted living? Or in this case, I'm assuming it's a bigger community, more beds. So the operator, and if they don't have one or one lined up ready to go, that is absolutely your first element, is who can I get to do that? And now you're starting a business. It's not a building. It's not. See, when you think apartments, and that's your main focus right now, it's a building that I fill with people that need to rent, and they're going to rent from me or rent from somebody else. It's pretty cut and dried. It's a lot less.
There's not a lot of amenities. There's not a day-to-day. They come in. Yeah. If they can get keys, they got water, they got heat, they got electricity, and they have no leaks. It's pretty hands off. But like my grandmother went from living alone to living with my parents to doing assisted living to going to memory care. My father, who just passed away back in November, he had an 8-year battle with Parkinson's, right? And luckily we were able to keep him home. My mom's really spry. She was able to take care of him, but he definitely would have been an assisted living candidate and then a nursing home candidate. So this is very near and dear to me of what we've been through. But you're talking about a business because there's so much more of this. It's more of the art, right? Of the feel of running and helping these people in this late care. It's the business of running it, taking care of these people, not just providing them a room to live in.
Absolutely. And that's, I always, when I teach, we've taught thousands how to do this. There's a real estate play and a business play. And the real estate's the easy part because it's bricks and sticks, dirt and mud. You can knock it down and build it again or fix what's there. The business side, that's the people side. And whenever people ask me what's the biggest challenge in this business, I always say people. It's the residents, their family, it's the managers, the caregivers, everything that goes into it. But that's why we get paid the big bucks. So the average person who's in that facility might be getting or paying $5,000 a month or more. So 100 of those people, that's 500 times 5,000 times 100 people. That's really, really nice cash flow. And you're going to net somewhere between 20 and 30% in the residential model. That's what comes to our bottom line. Those numbers are incredible. They're off the chart. So instead of thinking investor, because if you're just the investor, Josh, we're just saying, I'm just going to write a check. Now the question is, what are you writing a check for? Is it just the real estate that you're leasing to an operator and you just own the real estate? Good. Pretty simple. Like you said, the idea of the apartment, less moving parts. But if it's I'm writing a check and I own the real estate and the business, okay, this is the harder part. You know the real estate. That's the harder part, the business. Who's doing it? Do they have experience? Do they have support? All those different things. So it really depends. And this is the way I always say when you mentioned on the first question was the idea of what kind of rate of return or structures. And it depends on how hands-on or hands-off you want to be. And the simpler you want to keep it, I just want to write a check and receive checks, a debt fund, the lower your return. The more you're involved or the more you're in the thick of it, if you will, whether you're doing it or not, the higher your return, because the moving parts, and you get paid for that. So in your world right now, probably a 6 to 10% cap rate would be a really good deal in the current market. In my world, I wouldn't touch it unless it's a 15% or higher. So the moving parts of the business. Oh yeah. So it's really different, because it's not just the real estate, it's the business operations. And that's where you get paid big time for.
Now listen, so when you talk about the operator, I just want you to further define this, not only for me, but for our listeners here. So there's the operator, which could be one of your students, it could be a friend of ours, a guy finds the real estate and the business. But a lot of times there's I don't know if it's, sometimes in some of these facilities are big enough that they need licenses. You need somebody that has a license. Yeah. And then sometimes they're smaller where that's not the case, but it's typically the man or the woman. A lot of times in my experience, been women who are on site, who are kind of the day-to-day business manager of the residence, right? So you might have the operator, who in my case would be like one of your students, the guy that puts the whole thing together, but they're not on site every day actually taking care of the residents or working with the cooks, working with the cleaning people. So how important, and I want to say it's super important, but in your opinion, kind of define those differences between the investor sponsor of the deal and the actual business manager that's kind of on site every day working with the residents. Because as a maybe a limited partner or a passive investor, which is what I would be, I'm interested in both, right? I'm interested in both people. One that's more working in the clouds and one that's really working in the dirt.
Oh, yeah. All right, good. I love the way you segregated operator and manager, because the operator could be the business owner. They, like when I was doing the residential assisted living models, they're licensed for 10. And when I say when I was doing it, meaning when I was the operator, I was never the manager, never the caregiver. And you distinctly said they're different. Correct. Because I would not be there day to day. I don't even want to hear about what's happening day to day. You do it, you take care of it. That's why I hired the manager. So the manager is a hired gun, right? The caregivers are a hired gun. The operator is somebody who's got, either they're the owner and they're operating this, where they've hired people underneath them like I do and I teach, or they can be hands-on. I mean, there's a lot of people in our industry, residential assisted living, that are mom and pops. They live in the house, right? They're the cook, the cleaner, the baker, the candlestick maker. That's not what I want you to do. In your case, you're saying, if I'm going to be the passive investor, then the absolute critical thing for you is, who's the operator? Because you can't just say, I'm going to buy a mall today because the real estate is cheaper, it's a good deal. It's like, well, who's operating that mall? How full is it? Is anybody paying rent currently? Is anybody showing up? That's pretty darn important, because you could buy a mall for 10 cents on the dollar right now. So what are you going to do with it? Yeah. What are you going to do with it? So it's not it's the passive aspect of it. That's the challenge, guys, right now, because those doctors, in the case you just talked about, they came in as passive. It's like whoever was the sponsor of that deal, who's bringing it to you now, said, look, you bring in the money and I got it from here. So that sponsor, they're probably not the operational manager. They probably were hiring somebody to be that manager. So the key is, do they still have that contact, or did that person go work for somebody else already? Or can they find that? Because if they're just about the money, so I got the money from these 12, but now I want to get it from you to give back to them. Great. But who's going to do that operation? So the answer to your question is, they're critically important, that day-to-day manager.
Mm-hmm. And how are those people found? Like if you're starting with a 10 unit and then your goal is to build out, let's say 5 of those or 10 of those and get to 50 beds or 100 beds. And now you have critical mass that you could potentially sell that portfolio to a larger investor that wants the scale, but you're starting with your first 10. What are some tips or some ways to find that day-to-day manager who's going to come in and really take care of that? Because if you don't have the experience, you don't have the license, wow, that could be really dangerous to be responsible for that.
Well, first of all, you mentioned license twice, and I want to make sure everybody hears this clearly. Throughout the country, a lot of people operate without a license. Throughout the country, a lot of people are driving cars down the street without a license or insurance either. I don't recommend either one, right? in the state, every state's going to have their own rules and regulations. You should adhere by them. You should follow them. You should have properly trained, and whatever the state requires, managed. And if you're an investor, absolutely. I'm not doing a fly by night where there's risk. When you have a licensed business, there's rules and regulations, which are there to protect the residents primarily, but it also protects you. You can't get insurance, liability insurance on a business that's not licensed, right? So we need to do it properly. And I just wanted to start with that premise. Your question on how do I find them? The two easiest ways are going to be either go and find all of the current operators in that area and say, hey, if you're looking to expand, I'm looking for an operator. Maybe we can partner together. I provide the real estate or the capital. You be the operator. We partner together. Or two, come to one of our classes where you're sitting around a room full of people saying, half of them are saying, all I want to do is the real estate. And the other half is saying, all I want to do is operate the business. And it's like, why don't you guys go to lunch? Because I'm paying for the lunch. Just sit it together and talk.
You make it easy on everybody. I love that. That's great stuff. So, Gene, what is, and I do want to hear a little bit more about your background, how you got started with this. Sure. And I also would like to hear more about some advice that you'd pass along. But before I go there, what is the critical number where you see enough beds accumulated under one investment group where they're able to then sell that portfolio, hit a critical mass, get an amazing exit? Is it 50 beds, 100 beds? Is it 20? What's the number that you think is kind of that magic where there's somebody else, a larger fund or a larger institutional investor or some other group would want to take you out?
All right. Good question. So I'm going to start tiny, then we'll go to the top. So tiny, let's say 6 beds. When you're in our world, residential assisted living, taking a single family home, converting it, the smallest I think that is worth even considering buying or selling is 6 beds. I would not suggest anybody do 6 beds unless you're in an area that limits you to that or you're something. And then there's ways to manage that to make it worthwhile. 10 beds, let's call that the average because Texas allows you to have 16. There's 20 states that have no limit. But let's just say 10 beds. So one 10-bed facility could be worth $500,000, the business itself. So it literally, and that's not the real estate. That's on top of the real estate. The cash flow that is produced from that could be $500,000. I've seen them sell for as little as $50,000 and as much as over $1 million. But let's just call it $500,000. Now, here's the deal. If you've got one of those, it's $500,000. But if you had 10 of those, now each one might be worth $700,000. So because it's bigger money now can be attracted to it. A hedge fund doesn't want to write a check for $5 million. They don't want to write a check for $20 million. They want to write a check for $100 million because it's the same amount of effort to do the analysis, the due diligence on that one tiny little something versus the big. And their job is about moving money. They've got to keep it safe, keep it moving, and get a return on it. So they don't want to spend a little bit. They want to spend a big number. So I think you caught the numbers there. The more units you have, the more you're valuable. Now the bigger communities are, because right now, here's what's changed in this last year. In 2020, I've been saying this for 7.5 years, smaller is better. Now the whole world knows smaller is not only better, it's safer, right? Because these big box facilities are sitting there with people stuck in their room, sliding food under the door, where in our homes, these seniors are there living life, right? So it's safer. The big boxes were struggling big time. We were benefiting big time because people were leaving there, coming to us to be in a home, not a hotel that's locked down like a prison. So smaller is better, but the big guys can't get into the game with one house at a time. They need you or me or somebody else to put 50 of them together with the systems and the management team. So individually, the businesses might be worth 500 plus the real estate on top, or lease the real estate to them later. That's what I'm doing. That's a good play. But the 500,000, if you got 100 of those, now it's worth 700,000 each because they can write a bigger check.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. Fantastic stuff. Wow, I love the scale. I love the fact that just owning more makes each individually worth more than by themselves simply because of the scale. Larger money typically has to get a lower yield because they want that yield to be very safe and secured. And so they're looking to get maybe inflation times 2 or inflation times 2.5. They don't need as much of a yield, so they're willing to pay more to get it. So Gene, let me back up for a quick sec and ask you, you are very much the leader in this space, the Residential Assisting Academy. If people are very familiar with it, I've been familiar with it for years, even though this is the first time you've been on our podcast or we've really had a chance to really kind of dig deep here. It all kind of had to start somewhere. Where did you get started with this? When did you do your first facility? How did, like a lot of entrepreneurs, some people fall into it. Like, I just fell into it. I got my first building and now it's boom, I've got this big business. How did you get started? What are some of the challenges that you faced along the way?
Ooh, okay. So just really, really briefly, first real estate was 18, first commercial real estate was 25, but decades later, it was about 10 years ago that my mom started to need help. Now, keep in mind, just like you, I had heard about this way before that. And I remember it was 30 plus years ago when I actually heard about this whole concept. Nobody was able to teach me or show me, didn't want to, and weren't willing to. So 10 years ago, when my own mother needed help, and remember 10 years ago, 2011, the idea of what's happening in our economy, well, the real estate was going like this. And I'm like, well, this is a good time to buy a big house and start this business. My mom needs the help. I couldn't find what I was looking for, that I was safe and comfortable having my own mom live in it. So that's where I said, I'll create it. And that was the beginning of that journey. And so 7.5 years ago, I bought an existing one because there was nobody teaching and showing you how. So I bought one and I said, okay, what did they do right and wrong? What would I do differently? So immediately I was starting on my second one, which was creating my model, how I would do it. So that one was to build a take a house, renovate it, etc. Immediately, people were asking me to teach them how. So the whole education side of the business began as well. But it was 7.5 years ago, and I'm going to have to say it's because my mom needed help and we couldn't find what we were looking for.
Got it. I love the fact that it was a personal experience to get into it. Challenges, right? Like especially at the beginning, because you didn't have a playbook. There was nobody giving you the roadmap. It was probably a lot of trial and error. What were some of the original challenges that you face and some challenges that your students face, and how are they solving those?
Sure. I think you and I take things for granted sometimes. I can tell you have some gray hair like I do. So that means you have some experience and wisdom, and you and I might take something at second nature to us. But the reality is I had already had experience, like I said, from the age of 18 with real estate. I've already been raising capital and doing no money down deals prior to that. But I also am smart enough, and this is where the age and wisdom comes in, to say, I don't know everything. And I'd much rather learn from your mistakes and your efforts than mine. The school of hard knocks, the tuition is way too high for an old guy like me. So I knew I needed to surround myself with the right people who knew what they were doing, who could show me how, etc. So the first person when I said I want to buy, I needed to go find a place, found one to buy. And second thing is I need that manager, which we talked about how important that is. Found that manager who knows more than I do, because I don't know anything about this business. Explain the vision to him. Here's what we're looking to do. I want you to oversee and we want to grow, etc. So got him in. And once he's in and we've got the first one, I'm doing my thing, which is going on to the next one. So the raising of capital, never shortchange the concept of learning how to raise capital, because if you know how to raise capital from other people, you can do anything you want. You can fund any business, any expansion, any purchase. You can go to the moon, right? Or Mars, as Elon's doing. So the point is you can do anything, but raising capital, that skill is one of the most important things you could possibly do in your business career, period.
Love it. Fantastic stuff. So as we kind of round third here, Gene, and head for home. Again, you guys check it out. Gene's having this event coming up April 19th through the 20th. You can go to preparetopitch.com and go ahead and put in the promo code AI. AI stand for Accelerated Investor. You're going to get 50% off of your registration for this event. Gene's going to walk you through A to Z, how to prepare to pitch, not only just for residential assisted living, but it's a skill, it's a strategy that I use that you can use for multiple other businesses, e-commerce, apartments, mobile home parks. Use it for lots of different stuff. Walk you through everything he does. And in my world, there's kind of two ways to raise money. Gene, I know you do both. There's the referral model of working with people that already know, like, and trust you. And then there's the creating sort of a thought leader platform using digital marketing. I'm sure you're going to talk about both of those strategies to recruit capital for your deals. So definitely can't recommend that enough. Preparetopitch.com. Use the code AI for 50% off. And Gene, final question for you is really, as you said, you and I have a little bit of gray hair. We've been around the block. There's definitely some things you've learned about entrepreneurship, leadership, raising money. What are some of your biggest lessons that you pass along to your younger former self and to our audience? Some things that you want to kind of pay forward, or some concepts, philosophies that you have now that you've learned along the way?
Thank you for even asking that question. It's a really, really good one. And as soon as you said, tell your former younger self, what's really cool right now, Josh, I'm at the point where I'm working with my family. So my kids all work with us full time. And it's not nepotism. These guys are rock stars, but it's given me a chance to continue to share with them along the way. Here's what I've learned, and here's how to do it. They won't necessarily listen to me every time, but they do eventually, right? Because I've been around, but they'll listen to you before they'll listen to me. No, I'm kidding about that part.
We can trade families. My kids will listen to you. Yours will listen to mine. We'll do fine with each other. Yeah.
Which brings us to one of the key points. I mean, I could give you so many, but one is hang around with the right people, because your kids will be, and you will be influenced by the people you hang around with. We play poker once a month, and the group of guys we get together with, we do a prayer session beforehand. So we're sitting around the fire table and we're praying for each other. But these guys that I'm hanging around with are quality guys who are inspired, who are doing things, who are helping each other, who are thinking outside of them and into other people. That's inspiring. That helps me be a better person. So hang around with the right people. And, just like we jokingly said, but we're serious, you guys, your kids, they're going to be influenced by your friends, et cetera, who are you hanging out with, so they can speak into those lives. Another thing I think that when people ask me, what are the challenges with business? This is really important. Undercapitalization. One of the biggest mistakes businesses make, they don't realize how much it takes in order to get to break even and profitability. Businesses don't start off with profit day one. They lose money, and then they hit we're stopped losing money, and now we're at break even, and now we're making big money. But if you don't know that, you're not prepared. If you do know that, I need 50,000 in reserve in order to get from point A to point D. Now we're into the money. Then you're going to have a problem, and that is a big problem that a lot of businesses have: undercapitalization. There's so many more I can give, but let me give you one more. You're going to get good at something. And when I say you're going to get good at something, we've all heard the aspect 10,000 hours. So 2,000 hours, 5 years, you're going to be an expert at something. The question is what? And you have a choice. And I think a lot of times, especially younger people, they want the quick cash. I want to fix and flip. I want to make it fast. The problem is the moment you sell it, you're unemployed. You got to go find another one, and the grind begins. I'm in masterminds with people that are flipping 100 plus houses a month, and it's a grind for them to find the next one and do it and so on. And it's the same as being a salaried school teacher. You're on the wheel. So you got to figure it out. And the point is, that's nothing wrong with that, nothing wrong with the grind at all. But the point is, where's it taking you? What's it doing for you? And if you don't know where you want to go, I want you to slow down and sit under a tree, pull out a pad of paper, not your phone and your electronic notepad, pad and pen. It gets in your head that way. And ask yourself, what do you really want? Do you want financial freedom, and what does that look like? Do you want more time with your family, and what does that really look like? Because what's interesting, Josh, is I sit with people a lot, and we kind of, as a certified financial planner, we kind of can reposition assets. And lots of times people who are just grinding, they've already reached their goals, but they don't know it because they didn't define what their goal is. And their goal might be, I don't have to work anymore. What do you need? I need $10,000 a month flowing into my checkbook. Great. Take these assets, reposition this over here, do one residential assisted living instead of 100 something, and do this and make it simple. It flows in and you're done. Now you're free. And when you explain it to somebody that clearly, they're like, you're right. But they didn't take the time to just write it down. So think it through. You're going to get good at something. And my final piece, everybody's going to get involved in assisted living one way or the other.
Right. I've already been involved in it multiple times.
Yeah. Either the real estate, the business, or you or a family member may be lying in a bed writing a check to somebody who does. So right now you got a choice. So decide how you want to play that game.
Yeah, great stuff, Gene. Listen, this has been fantastic. Just kind of peeling back the onion with you, learning more about residential assisted living, but also structures. Guys, don't forget, go to preparetopitch.com, put in the code AI, Accelerated Investor, get 50% off your package, your ticket for Gene's upcoming event. It's going to be fantastic stuff. You may even see me there. Gene's going to, offer me a free ticket to come and kind of sit in. I'd love to be there. I think I'm really good at raising money, but there's always something else to learn. I'd love to hear more about your strategies, Gene. So listen, thank you so much for carving out some time for us today on Accelerated Investor.
Thanks for having me on. I appreciate it.
So, hey, thank you so much again for listening to that episode of the Accelerated Investor Podcast. Don't forget to check out Gene's opportunity and get 50% off of a ticket for his program called preparetopitch.com. There, you'll not only learn about residential assisted livings, but also particularly and specifically how to raise the capital for those deals. And of course, you can use those strategies to invest in apartments, mobile home parks, and even e-commerce businesses and single family homes. That event is coming up April 19th through the 20th in this year, 2021. And so if you enjoyed this interview, don't forget to leave us a 5-star rating and review in iTunes. Also, don't forget to hit the subscribe button in iTunes and wherever you get your podcasts and YouTube so you never miss another episode of Accelerated Real Estate Investor. Hey, Josh here, and do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes, okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're gonna do then is every week we're gonna pick our favorite rating and review, and we're gonna send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You were just listening to the Accelerated Investor Podcast with Josh Cantwell. If you enjoyed this episode and learned something new, help us build the AI community by leaving a review and 5-star rating on our iTunes podcast channel. Also, don't forget to subscribe so you never miss another episode. To see passive investing opportunities, visit freelandventures.com/passive. To start your journey toward the lifestyle you've always dreamed of with multifamily apartments, apply for one-on-one coaching with Josh at www.joshcantwellcoaching.com.